that's kind of an easy one. So I started my own firm in 1985. We returned all our outside capital 10 years later at the end of 1994. During those 10 years, we had averaged 50% a year returns before our fees, and then we gave back our money. So there's only a few ways to make 50% a year. One is to stay small. So after 5 years in business, we returned half our outside capital. After 10 years, we returned all our outside capital. The second way to do that is to be concentrated. So traditionally, 6 to 8 ideas were 80+% of our portfolio during that time. So we stayed very concentrated. The third way was you get a little lucky, right? Because you're very concentrated, so you got to get a little lucky to do that. But what comes with that style of investing, with 6 or 8 names, even if you're great and you're usually right and everything else, every 2 or 3 years, without fail, I would wake up together with my partner, and we would lose at least 20 or 30% of our net worths because 1 or 2 of our positions were not going our way. Either market didn't like what we liked for that particular time, and we just figured, okay, we own it cheaper. We understood what we owned, and we just own it cheaper, that's fine. Sometimes we made mistakes. I never had a problem with that because I understood what we owned, and I either made a mistake or I just owned it cheaper, and I could live with that, and I knew that was part of the game, that you lose 20 or 30% of your net worth. When you have other people's money, it's not that comfortable. You know, I'm a big boy, and I understand what I own and understand what I'm doing, but when you have other people's money, and my investors had done well, they were all great, actually. It was really my self-imposed feeling bad when I would go through those periods for understandable reason. I'm a pretty competitive person. I'd like to do well, and that was uncomfortable losing money for other people. So when we got to a big enough size that if I returned the money, we could still keep our staff and continue doing what I was doing, I thought I should do that because I figured I could either change my personality or change my circumstances, and I thought it would be much easier to change my circumstances. So I did that. Now we run long-short portfolios with hundreds of stocks on the side, and because our bad days are 20, 30 basis points of underperformance, I find that a lot more comfortable to run other people's money, so we started taking other people's money again.
Thank you.